Hey everybody, this is Brant from Wolf on Wall Street Trade with a market update for the week ending October 18th, 2019. I didn't do a video last weekend, so I'm going to kind of just briefly catch up. I think this is where we left off. So we had a big bullish hammer. We were oversold there, and we were heading into the next week over here. This is a weekly chart going into trade talks, trade negotiation talks. This is a 15-minute chart of the S&P 500. So I believe we left off right about here, the 4th. So this was the next week, came into that with kind of a low-grade bearish flag. And there's been a lot of like really low conviction trade on the part of both buyers and sellers. And we traded like this into those trade talks, which were Thursday and Friday. And we saw what was called trade optimism. And there has been a lot of that in the last couple of months. So breakout above this 2944 level for the S&P 500. And this is where we actually got the details late on Friday afternoon, right before the market closed. And once the market heard those details, it came down into the close. I actually opened a little short right in here in small caps. We'll get to that later. Let me bring this chart in a little bit on the 5-minute. So here is the Friday. Here is when the deal came out and the market got to hear it. And it looked like the market was a little disappointed. So right in here is where I sold some IWM short because of that reaction. So here we go into Monday of this week, which was Columbus Day, and the bond market was closed. And you can see nothing happened. So the market might as well have been closed. And again, here is this big move on news, on headlines. One thing I want to point out real quick is this 2970 area. A couple of weeks ago, I understood that there was a CTA buy-sell trigger. So you can see on that Friday, prices accelerated down once they broke below 2970. So it looked like CTA is selling, and then into this week on Tuesday, the S&P actually gapped up above 2970, and you can see it looks like those CTAs re-leveraged. So they dropped some of their long position here and then re-entered it here when price opened above 2970. These are mechanical programs, so price hits it, they go. That's it. There's no discretionary factors involved. Overall, it was a pretty dull week. Once we got past this Monday and Tuesday, you can see how we're just kind of trading around, slopping around a little bit, going sideways. This was also the start of earnings season, so the market's going to just kind of lay back and see what happens with earnings. They kicked off this week with the banks. I do want to point out this 3,000 level over here. So the S&P opened above that on Thursday. This was the first time in probably almost 2 weeks that I've seen like a real strong or just a notable 3C divergence. So I did see some selling into that high. Here we are on a 1-minute chart of 3C for the SPY, and this would be right above that S&P 3000 level. And you see it's just been really kind of dull activity in here, not a lot of conviction on the part of buyers or sellers. As price did gap up there on Thursday morning, there was a negative divergence, and that just kind of continued throughout the week, although not so much divergent as it was right here where price is up, 3C is down. On a daily chart of the S&P 500, this is the 50-day here, 200-day here. This is the trade optimism gap up, and that afternoon the news came out and the market came down towards the close. So this left a shooting star. That's a bearish shooting star on Friday. That's one of the reasons I got into that small short position. And then check out price action the rest of the week. So there's Friday, shooting star, bear shooting star. This is an inside day with a very small doji star. See, that's the open and close range right there inside of this day. And then we got a big day up here, S&P breaking through 2970, the CTAs re-leveraging up. And then the next day, an inside day again, bearish inside day. So what you might notice is a lot of like start, stop, start, stop, start, stop. And that is just that low conviction trade and headlines, and especially this week we also have earnings and individual stocks driving that. So the S&P ended up the week about 0.5%, pretty modest gain on the week. Here's the Dow Industrials, same kind of price action. Notice the long upper wick, that's resistance, or in this case I don't think it's so much resistance as just buyers don't have that conviction to hold prices up. Inside day here again, lots of little small stars. And this is Friday. This Friday selling off. Part of that is earnings related. Part of it was Johnson & Johnson. Oh my Lord. Recalling baby powder because they have asbestos in it. Boeing, seems like they hid the fact that there were problems with that 737 MAX, and Boeing sold off. Let's just say this week was not a bright spot for corporate America. So Dow ended the week down 0.2%. NASDAQ ended the week up 0.3%, but again, just look at these candles. You have a shooting star here, a very small star here, a big day up over here, and then an inside day. So these inside days, particularly this one right here, that's a bearish reversal signal. You get a little gap up and can't hold those gains, and down on Friday. And here's small caps IWM. 2 weeks ago, I thought IWM could do some catching up because of the really poor relative performance over here. It spent most of the week meeting resistance at this 152 level, which is a technical level on the chart where it's seen a lot of resistance, plus the 200-day moving average. So you can see resistance there, and a breakout over here on Thursday. It managed to hold it. That is an inside day on Friday. So a bearish development there. But these inside days, there's been so many of them recently, and that just has a lot to do with low conviction in the market, low volume, and headlines kind of driving like this stop, start kind of trade. Usually when you get inside days, they're pretty meaningful signals, like the one up here led to a good 6% reversal down here. And then we had a bullish inside day right here. There's a bearish inside day down, bullish inside day up. These signals happening with increasing frequency. Let me see if I can just highlight a few. Okay, so let's see. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And notice most of them actually lead to a reversal like this, or over here like this. But we've had basically 2 this week. So getting back to our 5-minute chart of the week, notice I don't have any real trend lines drawn except for this 29.44 area here. That's because it's just been changing so much. You know, we had kind of a bullish triangle over here that kind of broke down over here. Overall, the bulls are still in charge. You have a series of higher highs, then higher lows. Come up here to another higher high and a higher low. So that is still bulls in charge. Moving forward, keep that CTA trigger in mind. Now these change every single day. The levels move because there's about 12 different models that go into that trigger, but it's somewhere around this 29.70 area. As you can see, price accelerate down through it here and up through it over here. QQQ has a little different trend, and I do have these trend lines drawn in. I'll show you where they come from. Back here, what started out is kind of like a little bearish flag consolidation, but then it filled this gap, no longer a bearish flag, bumped into resistance. This is that trade optimism before the trade talks. So you can see this week we've come down through that channel. This is the same spot I saw distribution in SPY on the 3C chart that I showed earlier. And just be aware that you do have a pretty decent level here that should be support around 189. And looking at this chart, just judging by the way it's making lower highs over here and lower lows, I would think there's a pretty good possibility that it tests down to that area next week. So here we are back at the 5-minute chart, and I'll jump to small caps IWM. And again, we have those higher lows and higher highs. So the bulls are still in charge of this. I entered my short right around here. I think it was 150.50. This is that 152 level of resistance where the 200-day moving average also was. And here is that little break above it on Thursday. Dipped down below on Friday and closed above. What I'm going to do is back this chart out a little so you can see some levels here. So this is where I thought we would do some catching up in IWM. There's that 152 level. And then there's this level that's in play. That's around 153.75, and I'll show you where that comes from. On a daily chart, it comes from the May high over here. And notice that that May high, you know, S&P is what, a percent or so away from its all-time record high. Well, not small caps. They are way, way off their all-time record high. But this is that zone of resistance I've been pointing out, and it doesn't look like a perfect trend line from here. Let me show you on a 30-minute chart, or rather a 60-minute chart, and you can see kind of where I came up with it. Resistance over here, and backing out a little bit more. So in this case, it's hard to catch every single high on this trend line, but I just kind of went with levels that I thought were meaningful. But I did see resistance here, a little breakout and a failure there, and it really failed bad right as it broke below that trend line. Again, a breakout above, failed. So that's why I went with this trend line. So, you know, we could see a move a little bit above that 153.75, but that's kind of the area I'm looking for, maybe some resistance. So here it is up here, And then the next important level will be 152 if we get a break below 152. When I entered this trade right here, I wasn't looking for a huge move. I was looking for maybe something down into this gap. I may add to this trade. It just depends on market signals, probabilities at this point. So I'm only at like a quarter of my position size. And here's the 1 minute 3C chart of Russell 2000 futures. You can see the time down here. So this is right about Thursday's close. So 3C was in line, trading very well, confirming. So it looked pretty strong going into the overnight session into Friday morning. But this is before the open. Here's the open down here, the cash open. And you can see 3C was not looking good as the Russell 2000 was trying to rally. It was negatively diverging. And this is the rest of the cash session. Friday afternoon started negatively diverging on this little bounce off the session low over here. And back here on IWM's chart, we do have that same signal. Here's that bounce off session lows Friday, and 3C just plunging into that. So that was the weakest signal for IWM this week. And for QQQ, where we actually saw the trouble first in the technology sector. So this is Monday, low conviction trade as the bond market was closed. And you can see a small negative divergence here. And again, like the SPY, when it gaps up over here on Thursday into a negative divergence, and that continues over here in Friday as prices are trying to rally. So lower, you can see a small little bear flag there, a second leg down. Here's the bounce off the session lows. And like IWM, a little bit of a negative divergence into that bounce. So these are probably the clearest 3C signals, divergences anyway, that I've seen in the last week and a half to 2 weeks or so, just to give you some perspective of just how dull it's really been in terms of traders' conviction. And then the most heavily weighted sector, which is technology, it did break this trend, this kind of support trend, which is right around here. I guess you could say around 81.60. So break below that, back test, and this is Friday. See that little bearish flag and a second leg down, bounce off session lows. It's a very mixed market in terms of S&P sectors, and a lot of that has to do with earnings. I don't know about you. Everybody has different trading styles, but I don't like earnings season. There's just too much uncertainty. They can either miss or beat on revenues. They can miss or beat on earnings. Say they beat on both, but then come up with crappy guidance. The stock goes down. Or they miss on both, but have good guidance. There's just too many variables for me. But even with their first reactions, we're seeing a lot of those being unwound. Here's one in industrials, Honeywell. So gapped up on these earnings, right? Did good, then sold off, gave it all back on Friday. CSX, the railroad, gapped up on earnings, gave it all back. Here's Netflix. They reported earnings. CNBC like, oh, they're not so bad. They're not so bad. Earnings gaps up and then gives it all back. So I don't know what they're saying about it today, but it just depends on which way price moves. If price moves up, they're bullish. If price moves down, they're bearish. It's just, that's not a way to invest or to trade. Here's Taiwan Semiconductor, made an all-time new high. Earnings, gave it all back. Here's Boeing, absolutely hammered on Friday, down 6.8%. Or over here, Johnson & Johnson. It appears they are recalling baby powder because it has asbestos in it. So down over 6% Friday. So this weighed on industrials, weighed on the Dow. And these aren't really earnings stories, but I'm just trying to get across that market action in earnings season, at least the first week when the market doesn't really have a good grasp on how earnings season is going. You get a lot of these kind of knee jerks back and forth. I think by next week when we get into the thick of earnings season, the market will start to see what the trends are, and then we'll start to react to that. So we'll have less of this market of stocks and more of a stock market. I want to try to give you just a little perspective because I don't listen to CNBC often, but I did tune in today after the close for about 5 or 10 minutes. And I don't know if it was a host or a guest, but they were going on and on and on that all that matters is the trade narrative, the trade talk narrative, not the actual result, just the narrative. Hoping that something will break loose and it will turn everything around for the entire economy. And this person went so far as to say, the earnings don't even matter. If the earnings are bad, it doesn't even matter. As long as the trade narrative stays good. Not as long as trade results stay good, but as long as the narrative, the market's warm, fuzzy feelings about that. I just want to quickly show you what's online here, what's been happening the last couple weeks in terms of economic data. Some of the major releases, I'm not covering them all. First, I just want to tell you something about economic data. Generally, I look at it on a year-over-year rate of change basis. You have to look at it kind of like a sine curve. So generally, it's going to trend like this in a sine curve. It's not going to go like this. So with that in mind, this is the ISM manufacturing. This came in just about a week or 2 weeks ago. This is the largest shrinkage in manufacturing in a decade. This 50 level right here, 50 denotes the dividing line between expansion in manufacturing and contraction or recession. So the last 2 months over here and over here have both printed below 50. Manufacturing sector in recession already. And another narrative has been, well, it doesn't matter because services are 70% of the U.S. economy and services have been strong. Well, this is the ISM services. You note the trend, what's going on here. So it came in over here, the last ISM services, about 2 weeks ago. That's a 3-year low. The manufacturing is spreading kind of like gangrene over to services. The manufacturing went first. Now it's heading into services. Had a very, very ugly print over here in retail sales, and then again in I think it was February of 2019, and then it popped right back up and everybody said, oh, it's not a problem, don't worry about it. So this is this week's retail sales. That's the biggest drop since February over here, biggest drop in 7 months. That was followed by industrial production this week. Notice again the trend. And then China has been another narrative. Got to be bottoming just around the corner. Well, this week we got third quarter China GDP. Now it came in at 6%, which is a very respectable number when you compare it to US GDP. Well, China's not a developed nation. They're a developing nation. This is the worst print in GDP, Chinese GDP, since modern records have been kept, or since 1992. So that means we've went through several recessions already since then. Notice the trend. Weaker than the financial crisis, weaker than 2015. So my point isn't the sky is falling. My point is that you could have favorable opinions about trade deals. And look, if you want to bet on a trade deal getting done and everything recovering quickly, so yeah, you could make a lot of money on being positioned for that outcome. Everybody's different. Everybody trades different ways, invests different ways. I respect that. For me, I'm about data, and when I look at the data, it's not a few bad prints here, a little noise, a little revision. It is a trend, and it is a trend globally, and it is a trend that we're seeing moving into the U.S., first in manufacturing, now moving into services. These are some of the first signals in 3C that I've seen in a couple of weeks, positive or negative, not a lot of conviction on the part of buyers or sellers. So we do have negative divergence here in QQQ this week, over here in SPY. And while newer, we have one in IWM over here before the market opened into this little rally, again on this bounce into the close. And I totally forgot to mention this when I was looking at sectors. I did bring up XLRE, the real estate sector, on Thursday. I said it looks like it's going to break out of this big consolidation range. And you can see how big that range is here. Here is Friday. It did start breaking out. If treasuries move up and yields move down, that's going to help this sector even more. I put out my price target on Friday afternoon for this sector, and keep an eye on the other two defensive sectors. Okay, so that's going to do it for this weekend's video. Again, members, I may have a video out Sunday depending on how this vote goes and how futures look on Sunday night. Thanks everybody for watching. If you liked the video, please give it a thumbs up. Feel free to leave comments, questions in the comment section below. And don't forget to check out the website at wolfonwallstreettrade.com. There is a link below. Have a fantastic weekend, everybody.